Hello my fellow freedom builders and welcome back to the channel. Today's video has a bit of a bold title about markets and stocks going to skyrocket, and the reason for the thumbnail and the title is I really think that is what is going to happen. Now you get the summary here right now if you don't have the time to listen to all my details, but basically what I think is that inflation will go further down, therefore the Fed will cut the interest rates and that will result in higher stock markets. That is basically it. So if you don't have time for the details, you can shut down now, but here comes my explanation for why I think it will go like it may do. I should say right away, I could easily be wrong, and I am looking at my charts, so I will, if they start to show lower highs and lower lows on a weekly chart, well then I was just wrong and I will position myself for that. I don't have my ego invested in this, so if you come out in the end of the year saying, oh, you were wrong, you said it was going to go up, well, I have absolutely no crystal ball, so everything could go in the opposite direction. So let's get into the details. First of all, just before New Year, I said I thought 2024 would be a fantastic stock year. Also, I said the market was prone for some sort of correction. Now we have had the correction, or at least a very, very small one, less than 3% in S&P 500. That is nothing. So we might see some more, but overall, what I think is that the market at the end of the year will be higher. Now, what is the reason? We know Fed are talking about lowering the interest rates, and they will do that. The question is how much and when. If we're looking at the overall charts here, we can see this is the cmegroup.com. It is the FOMC countdown. You can just search that up. We can see that the next Fed meeting is in 20 days and 10 hours. And we can see that what the market is pricing in a probability is a 97.4% probability of Fed keeping the rates where they are now at the next meeting. And I think they will. But when we're looking at March here, we can see that already here we have a 67, almost 70% when you combine these two, probability of at least one rate hike. Are we going into May? Well, then there's absolutely no probability, almost at least, for the interest rates to stay at 5.25. That will be somewhere between 1 and 2 rate hikes. And when we get to the end of the year, we can see that interest rates will probably be somewhere between 1 and 1.5% lower, meaning 4 to 6 rate cuts. Now, why do I think this will come true? Because a lot of things can change. Well, we have to look at the inflation, because the inflation is one of the main drivers of the Fed's decisions about interest rates. And we can see today we get the inflation rate, and of course there is a core inflation. That is what Fed mostly looks at. That is excluding not transportation, but food and gas. So I normally look more at the normal inflation rate that includes everything, because I think that's a more honest look. Now, last time the inflation rate in the United States was 3.1%. They're forecasting that today to get to 3.2. Some are saying 3.3%. And I guarantee you that the financial media will have a party telling about now the inflation rate is going up and Fed won't cut rates and all that stuff. But I don't believe them. And I'll tell you why. Let's have a look at the inflation rate month over month. If you don't know it, year over year, this one, that calculates 12 months back. If we look at this one, we can see that this is year over year, meaning 3.1%. That is the inflation going 12 months back, and then seeing how much have prices gone up over the last 12 months. And the year before that, it was from October to October, then from September to September, and so on and so forth. All right. Knowing that, we go down to the inflation rate month over month. So this tells us how much inflation went up the single months. And we can see that they are expecting the December inflation to be around 0.2%. Now, over a year, that is still just 2.4% if you multiply it by 12, of course. But as you can see, the reason why they are actually thinking that inflation rate year over year will go up by 0.1% is that when we get the new December number here, the last December number will disappear. Meaning that if the forecast is correct and we get a 0.2% this month and a 0.1% disappears, then of course that will send the inflation up by 0.1%. But it is only because that the low number today is a tiny bit higher than the even lower number last December. All right. So what will happen this spring and early summer? We'll have a look at the inflation numbers that were in January, February and April last year. Well, if we keep the inflation rate month over month at around 0.2% in January, February, March and April, that will give us 0.8% in inflation altogether. But what will disappear from the calculation? 0.5, 0.4, 0.1 and 0.4, which means that will be 1.4% inflation altogether. And we only added 0.8 if, of course, the inflation stays at 0.2% per month. So we are losing 1.4% from the calculation. We are adding 0.8% from the calculation to the calculation. So that is 0.6% altogether in negative inflation effect. And when we are looking at the inflation being around 3.2%, and we are removing somewhere between 0.5 and 1%, that sends us down between 2.2 and 2.7%, which is very, very close to what Fed actually says they have as a target. Now, if we look at the website Trueflation here, this is a website I have become a big fan of. We can go in here, we can look at the US inflation. They are downloading prices on a second-to-second basis, millions and millions of data points to see what is the true inflation right now, and therefore the name Trueflation. And as you can see, it was actually down at 2.07% here in the beginning of January, have gotten up a bit, but we are just above 2% in real time, you could say. So what I think will happen is that looking at this, unless something really crazy happens and the economy is going crazy and everything is going up, which I don't think it will, because actually the world's economy is not that great, well, then we will see a fairly low monthly inflation at somewhere around 0.1 and 0.2% per month. We will see these large numbers drop off, and Fed and everyone else will go out and say, oh, look, the inflation is dropping. Who could have guessed? Well, everyone could have guessed just looking at the numbers. So, yeah, I think the inflation will be down around 2.4, 2.5% when we get to May, June time. And that will easily get the Fed to argue, when we get to the May meeting here, that I think, well, 2 cuts is most likely. I don't think 3, but I think they will accelerate late in the year. I know the Fed dot plot is only showing that, let's just have a quick look. Don't we have a dot plot here? Yes, we have. Let's see, a chart. Here we can see that at the end of 2024, the average is around 4.5, 4.7% that the Fed members think the interest rates should go down to. I think we are going to go a lot further down, and so does the market. If the interest rate is getting cut more and quicker, then the stock market will be happy, and we will definitely see a big rise in stocks. Now, you could ask yourself, is this a good rise? Is it based on some solid economies? No, not necessarily. And we are going to see in the upcoming earnings season that starts just this week. Tomorrow we will see if they are cutting their earnings and their revenues and so on. But I think that lower interest rates will definitely make stock markets go up. So my prediction, and yes, you heard it, I am actually using the word prediction. My prediction is that this is going to be a decent stock year. I can't predict if it's going to go up 10% or 35%, but I think it will be in the very high end. All right, as I said, I haven't got my ego invested in this, so I am more than willing when we get 1 month or 11 months ahead saying, all right, guys, I was wrong in my guess. So if market starts to turn down, I have my stop losses and I would just act accordingly. That was all for now. I hope it made sense. As always, you are more than welcome to ask me questions in the comment section below the video or on my Facebook pages or wherever you find me. That's all for now. Take care of yourself and your money out there. And let's cross our fingers that my hope, guess and predictions are correct about the markets. Bye for now.